Look at me. I want you to really listen to me right now, because what we are going to talk about today is something that causes so many of you to stay awake at night, pacing the floor, completely consumed by fear. You have worked so hard your entire lives. You have skimped, you have saved, you have sacrificed. And now, you are either retired or you are standing right on the precipice of retirement, looking down at the money you've managed to accumulate, and you want to do what any loving parent, grandparent, or friend wants to do. You want to help your children. You want to give your grandchildren a head start. You want to give them a financial blessing while you are still alive to see the joy on their faces and see that money do some good. But what happens the moment you start thinking about writing that check? Fear takes over. A massive, paralyzing fear of the big bad IRS. You have been told, or you've read somewhere online, or you've heard some neighbor talking over the fence, that if you give your kids too much money, the government is going to step in and hit you with a massive, punishing gift tax. You are terrified that by trying to be generous, you are going to accidentally trigger a tax audit, ruin your own financial security, or hand over a giant chunk of your hard-earned retirement nest egg to Uncle Sam. So what do? You do nothing. You keep your checkbook closed. You let that fear paralyze you, and you miss out on the pure joy of watching your family thrive because you are scared of a tax that you probably don't even understand. Let's clear the air right here and right now. I want you to take a deep, clean breath, because I am about to tell you the truth, and the truth is going to set you free from this unnecessary worry. The question you are all asking is, what is the gift tax, and how much can I actually give to someone without having to report it to the government? First of all, let's understand what the gift tax even is. The gift tax is a federal tax on the transfer of property or money to another person while receiving nothing, or less than full value, in return. The government created this tax for one main reason, to stop people from giving away all their money right before they die just to avoid paying estate taxes. That's it. It's a backstop for the estate tax. But here is the massive misconception that is causing so much absolute misery out there. Many of you think that the moment you give someone $1 over a certain limit, you have to write a check to the IRS for 20, 30, or 40% of that money. That is completely, 100% false. It is a myth, and it is a myth that is robbing you of your peace of mind. The Internal Revenue Service gives you two very distinct, very beautiful tax shields when it comes to giving away your money. The first shield is what we call the annual gift tax exclusion. This is your magic number for the year. This is the amount of money you can give to any single individual in a single calendar year without having to file a single piece of paperwork, without filling out a form, and without the IRS ever needing to know about it. For this year, that annual exclusion amount is $19,000. I want you to hear that number, $19,000. That means you, as an individual, can walk up to your son today and hand him a check for $19,000. You can walk up to your daughter and hand her a check for $19,000. You can hand a check for $19,000 to your grandson, your granddaughter, your best friend, or your neighbor down the street. You can do this for as many different people as your heart desires and your bank account allows. If you have 5 grandchildren, you can give each and every one of them $19,000 this year. That is a total of $95,000 leaving your estate, and guess what? No tax is owed, no reporting is required, and nobody is in trouble. Unless you are a multimillionaire with tens of millions of dollars to your name, you are never, ever going to pay a federal gift tax in your lifetime. All you might have to do is file a simple piece of paper to tell the IRS that you used a tiny fraction of your $15 million lifetime allowance. That is it. So why are you letting this fear stop you from being a blessing to the people you love right now? Now, I want to give you a few more pieces of powerful information, because there are even ways to give totally unlimited amounts of money for specific things without even touching your $19,000 annual limit or your $15 million lifetime limit. The tax code provides massive loopholes for 2 specific areas that matter deeply to retirees: education and medical care. If you have a grandchild who is going to college, and the tuition is $40,000 a year, you can pay that entire $40,000 tax-free, with zero reporting, under one very strict condition: you must pay the educational institution directly. Do not give the money to your grandchild so they can pay the college. If you write the check to your grandchild, it counts as a regular gift and triggers the reporting rules. But if you write that check directly to the university for tuition, it is completely exempt. You could pay $50,000 directly to a college for tuition, and then turn around and hand that same grandchild a separate check for $19,000 for their personal expenses, and you still wouldn't have to file a single tax form. So your actionable takeaway today is very simple. Step 1. Pick up your phone or look through your records and determine exactly what you can truly afford to part with without changing your standard of living or threatening your emergency reserves. Step 2. If you decide you have the excess funds and want to give, remember the magic number of $19,000 per person. Keep your gifts at or below that number per individual for the year if you want to completely avoid the paperwork of Form 709. Step 3. If you need to give more than $19,000 to help with a true emergency or a major milestone, go ahead and do it with joy, knowing that you will just have to file an informational Form 709 next year, and you will not owe any tax because your $15 million lifetime shield has your back. And Step 4. If you are helping with college tuition or medical crises, always pay the institution directly to keep that money completely outside of the tax reporting system. Stop letting fear dictate how you live your life and how you handle your wealth. Educate yourself, protect your own retirement baseline first, and then, if you are able, use the law to bless your family legally, safely, and with an absolutely clear conscience.